All right, so really quick update on the charts and the markets at the moment. Just really quickly, these lot, my account's on 111k, but for some reason, I can't access my dashboard. It keeps hitting me with this message. I'm trying to get these lot to sort it out. Nevertheless, so yeah, we're on 111,000. So if we take a look at this US 30 chart, obviously price was trading in a range. We broke out of the range and then we crashed down to the lows. And what did that look like? That looked like this. We broke out of the range here. And as we broke out of this range, price retested the range as we usually do. We had a break, we had a retest, and then price crashed down. So now at this kind of moment in time, we was expecting price to continue higher. And what happened was, as we retested the lows and swept the liquidity, which was resting right here, as we swept this liquidity and we targeted this fair value gap in this area, price made a market structure shift down here. So we crashed, swept liquidity, had a lower low, had a break and retest the structure. So this candle here, and then price breaking above it at this level right here, indicated that we had a break and retest. So we had a breakout market structure shift. So price was expected to go back higher. So as we was expecting price to go back higher, we was looking for levels of liquidity on the hourly chart. And what did that look like? So first of all, we had liquidity resting at this area here. This was the low Monday's session. We had liquidity resting here. We also had liquidity from Friday, which hadn't been swept, and this was Asian session low on Friday. So we also had this level of liquidity. So we had two levels of liquidity that we was targeting. And if we take a look at the daily chart, we had this fair value gap right here. So we was expecting price to try and break through the fair value gap. And what happened was, obviously we had a build up of liquidity here, build up of liquidity here, and we was expecting price to try and break through it. But unfortunately, as we swept liquidity here, we failed to get price to go back in, to go back up, and we crashed lower. I expected this to be a sweep of liquidity as well to take price back higher. So the trade that I took today was a buy trade from here in an attempt to target price all the way back up. But unfortunately, we started to fail. So this is where I exited. I exited around the top, and I'll show you exactly where I exited. I exited right here, close to the highs. I think it was 64 I got out at, which was around here. So I exited the market. This was my take profit for the trade. I exited the market here and price started coming back down. The reason I exited the market is because when price is attempting to go higher, once it sweeps liquidity, we should see displacement. And what that means is we get one candle, one green candle, we get a second green candle. This candle should also close green. So it should be displacement up. We've taken liquidity, liquidity indicates momentum. So we should see price just rally aggressively back up. And what this should look like is we should easily get back above our levels of liquidity. This is what a sweep of liquidity is. We take all the liquidity, we take all the stop losses out of here, and price just rallies higher and aggressively and tries to get back into the zone and hopefully gets above our fair value gap. But because we failed here, this indicates to me that there's a potential chance that we're going to go lower. And why do I think this? Well, first of all, we had this level right here, and this is our level that I like to call our market structure shift level. If price closes below this level, this white line, we know that we have shifted to the downside because price went up, we closed, price made a retested that high, and now we've now closed below it. So you can now argue that the market is going to start trending down again, or trending down, trending aggressively lower. So basically, what I believe is going to happen is I think we're going to retest the lows, and it's going to be very, very important to see what happens when we retest the lows, because everyone seems to think that the market is back in a bullish uptrend. I think I completely disagree with that. Um, Obviously, based on the market that we had yesterday and the day before, we had an uptrend in the candles, but we've now cancelled the uptrend. So we should be expecting price to continue lower. And that's why I didn't want to hold the trade, because once we broke this level in intraday, the main thing I'm looking at for the rest of the day is to see whether or not price can get back above this level. And we failed to get back above here, where we closed here and then we swept the highs of this green candle and then we started going down again. That's an indication to me that price wants to continue lower. And we have this level right here as a place to target. So if on Monday, well, market's going to be closed on Friday, and I assume we're also going to be closed on Monday. Well, in the UK, it's bank holiday. I'm not really too sure what it's like in America. But if price is going to continue going lower, the moment we get below this level, which I'm expecting to happen in the next few sessions, we're going to see price start moving down aggressively. And the reason this is bad is because if you take a look, we had a market structure shift here, and we saw that when price came down, we shifted, started going higher. But this market structure shift may have just been an attempt to target this fair value gap and fill this imbalance before we start going down again. It's what you call an imbalance in price, and price likes to reprice at this level here in attempt to, get people to position, or get institutions to position at a premium part of the zone before they short the market down. And I was thinking about this. I've been thinking about this since price was trading around here. I think it was on Tuesday, and I actually got into a trade on a demo account because I was pretty sure that, well, not pretty sure, but I didn't have a trade signal. But if I was an institutional investor and I wanted to short the market down, this would be the optimal place to position. So if you take a look, I did get into this trade on this demo account. Obviously, it's not real money; it means absolutely nothing. But this is the area, and if we go into the daily chart, I hope this doesn't confuse you guys too much, but this is the area that would have been the optimal place to position because of this fair value gap. However, I like to trade with actual trading signals. I like to wait for the market to actually present it before I actually get into the trade. That's why I didn't take the trade on my live account. That's why I waited to on my funded account, I should say. That's why I waited for the market to actually confirm the downtrend. So from next week, I should be confirmed to start looking for short trades. And the way I would do that is essentially looking for a sweep of Asian highs. At the moment, we don't have any, solid places of fair value apart from this area here. So unless the market shoots back up here, that's the only place I'll be able to position. Apart from that, I have to wait for Asian session to sweep and then I can start positioning. But yeah, that's just an explanation of what took place this week, into Easter this weekend. The market should continue a bearish decline, and it actually might be a further crash. Um, we've got quite a lot of I call this area, it's just a no man's land. So there's not really much that can be done in this area once price gets below it. Once price gets into this area, there's nothing that's really going to stop it. Yeah, we do have fair value gaps, but the truth is price will attempt to target the lowest fair value gap, which is all the way down here. So really and truly, there's a chance price just trades down aggressively. Once we break these lows, there's a chance we just trade all the way back down into this level down here. Um, so that's what I'm looking at. Obviously, going into Easter, I just wanted to update you guys. I'm not exactly going to be trading aggressively on my funded account. Um, Hopefully these guys resolve this for me. She just said try a different browser. All right. I hope she resolves that because my payday is expected in the next 10 days, 11 days. On the 28th, I should be getting paid. And I'm also going to show you guys that as well once the money lands in my account. But it's really interesting what's going on in the markets. It doesn't seem like the bottoms are completely in yet. We can see a lot more volatility going into next week. Um, or we could go higher. I don't know what's going to happen. We've got to wait and see. But yeah, I'm going to leave it there for now. I hope you guys found value in this video. Um, if you don't know who I am, my name's Take Note. I'll see you in the next video.